Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, the first thing that we have to notice is that the pattern that we have here is that of a clear impulse followed by this complex correction, and currently we're getting the continuation to the upside. So we could expect more bullish continuation in a situation like this. We can also notice that as we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market corrected precisely to the 0.618, so the golden ratio of the Fibonacci taken on the impulse leg right here, and now is getting rejected to the upside. So again, in a situation like this, we could expect more bullish continuation. Now, if we look at the most recent price action, we can notice how at the moment the market is testing previous weekly resistance turn support here. From here, multiple rejections to the downside were created. All this previous resistance is now turned support here. The market is testing it and rejecting it to the upside. So from here, we could expect more bullish continuation away from this area. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can identify the weekly structure even more precisely. We can see, in fact, how this level that was acting as previous weekly resistance here, and again here, has now been broken to the upside. So what we know is that in the market, previous resistance, once it gets broken to the upside, becomes support. So at the moment, the market is retesting previous weekly resistance turn support, rejecting it to the upside. And from here, we could expect more potential bullish continuation. Dropping down on the daily time frame, what do we see? Now, here on the daily time frame, we can see how the market is currently testing previous daily support turn resistance here. I did speak about USDCAD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, when the market was here, I explained all the reasons for which we could expect first this correction, and then from here, more bullish continuation. And again, that is exactly what the market gave us. And then we had the creation of this M pattern. And from here, I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside, completing the pattern at the neckline. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, before we continue with our analysis here from a technical perspective by looking at the daily time frame, let's first go and see what we have when it comes to the commitment of traders. So the COT data, which is essentially what institutions and the big players in the market are doing precisely on the CAD. Now, what we can see here is that with the last reports, we went from having a positive net positioning of plus 6.3k net positions with way more longs than shorts from an institutional perspective with 36k longs compared to 29k shorts, all the way down to now having a negative net positioning of minus 49.3k net positions with 74,000 shorts compared to only 25,400 longs. So clearly institutions have been moving to the bearish side of the CAD. Now, we have to keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, you're actually already checking CAD USD. So if we want information on USD CAD, we simply have to reverse everything that we are looking at here, because institutions moving to the bearish side of CAD USD means that essentially they are longing USD CAD. So institutions are already moving to the bullish side of USD CAD, and that can be clearly seen by the market following this uptrend. Now, moving back to the technical side of the of the market and keeping in mind that institutions are longing, what we have to identify here is this very important structure resistance area. This is previous daily support turned resistance. Until the market will remain below this resistance, it can easily continue lower. However, if we get a break above this resistance, this is where things get very interesting, because what we know in the market is that previous resistance, once it gets broken to the upside, becomes support. So we don't know if we will see this break, but if we get the break on the retest of this previous resistance turn support, this is where we have very good probabilities of getting a potential rejection to the upside away from the level, because if we get a break of structure, this is where we could get more institutional longing, which at that point would further increase the probability of a potential rejection to the upside. Now, in a situation like this, if we get the break on the retest, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find both linked in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.